everybody, welcome back. My name is Matthew. Thank you for joining. Today we're going to talk about a country and look at a slide that I've been meaning to compile for a long time. That is covering Russia's debt and Russia's monetary sector. Obviously, Russia has had a full-scale invasion of Ukraine for almost 3 years now. If you're a long-time listener of the podcast or viewer of this channel, which has been on for about 2 years now, you know that I'm no fan of terrorist Russia, autocratic Vladimir Putin, and I want all the best for the people of Ukraine. They should be armed and able to defend themselves to the hilt, and I wish that the West had done much more. We're going to see what happens with Trump coming in next year if a deal can actually be done. Nonetheless, let's take a look at some finances here to see where Russia actually is standing. We're going to look at two things primarily. The first is debt, and this is debt of the Russian government, the Ministry of Finance, the Russian people. The second thing is money. Okay, money has more to do with exchange rates, the value of the ruble. It has more to do with the printing press, how much rubles have been printed into the economy. And that, of course, affects price inflation rates and just the value of the ruble, that is the price of money, against another stronger currency, which is the dollar. So first thing we're going to just show is the ruble exchange rate over the last 30 years or so. Okay, during the 90s, they had a different rate in its entirety. The Russian-Asian crisis happened at the end of the 90s, devalued here. We have Vladimir Putin came in December of 1999. Okay, the terrorist dictator has been in power for 25 years, save 4 phony years of being prime minister with Medvedev from 2008 to 2012. He's been a dictator for 25 years. Everybody knows it. Leading up to the GFC actually looks kind of stable, right? These are the great Putin years. He's returning the economy to glory from the 90s. But then if we can see all was not well as the GFC happened. We'll talk about that. And then the first invasion of Ukraine, 2014, February. It's been has been over 10 years now, going on 11 years of full invasion of Ukrainian territory. Ruble devalued a lot. Russia had a lot of sanctions here. Devalued even more here after the full scale to right now, November 2024. This is the monthly frequency, 106 rubles to the dollar, which it is around that as of this recording. Okay, I'm recording this on December 13th, Friday the 13th. Let's look at this. This is the ruble dollar rate. We can see, obviously, if you just look at Putin over the long term, has he done well for his people? Looking at the currency, surely not. So let's reset the zoom. Now, let's put in debt. We're going to start with external debt. What is external debt? This is just debt that the Russian government, the Russian people, owe to foreign investors. Okay, this can be foreign central banks. It can be foreign banks, foreign pension funds. It can be foreign individuals. All right. Usually you'll find these things priced in dollars. Everything here, though, I'm going to show in rubles. I'll give you some dollar figures. I got them handy, but we're going to keep this with rubles so you can see the native, lovely currency that is the ruble. All right, so we have the exchange rate on still here, the ruble dollar rate, or dollar ruble, I should say, how many rubles per $1. Debt usually increases, right? We get to a period here, January 2015, topping out at 40 trillion rubles worth of debt. And then we get, actually, they kept it relatively sustainable from that time. We get to the full scale now, March 2022. What is this going down? Take off the exchange rate. They defaulted, okay? A couple $100 billion worth of debt they defaulted on here, okay? This little gear leverage symbol here, they defaulted. It's gone up a little bit. You can be sure this is India and China more than any Western country taking this up in dollar terms. And now they're somewhere around 28 trillion rubles, or if you want to know that in dollar terms, it is about $300 billion. Okay, so Russia's a small economy, actually, for supposedly having the second greatest army in the world. I'm not saying that the United States is good to have this amount of debt at all, but the United States is 20 plus trillion dollar economy in GDP, $35 trillion in debt. Russia is way different, a way different ballpark from that side. Again, I'm not saying it's good to have a large amount of debt. I'm just trying to provide some scale here. It's only $300 billion in foreign debt that Russia has. Now, let's take in to account domestic debt. What is domestic debt? That is debt that the Russian government owes from its bonds. It's obligatius is the rough Baltic Slavic word for bonds, obligations. It's called Russian bonds to investors. I'm going to add that in now. Local investors, we're going to show the total public debt in rubles here. Okay. So this is the total in light green, and we're going to look at the total most of the rest of the video. But I just wanted to show you external debt first. You can see that that is indeed like the bigger portion here. At the beginning, there was no external debt. No one would even want to hold rubles. Okay, you're always going to be investing in foreign currency. This is how it works. And I guess one more thing to say that I haven't even mentioned on the outset, you know, for all the videos that I've done in the last 2 years about the money supply, about debt, about interest rates, whatever, usually that's in the context of the United States. And in the context of the United States, normally we're not thinking about FX, exchange rates, the price of the dollar versus the price of other currencies. That might change with Trump's tariff policy. We'll see. But we just actually, those of us that trade in or live in the United States or think in terms of dollars are extremely lucky that we don't have to think in FX rates. Okay, ask the people of Brazil, Argentina, so on and so forth, people of Russia, how that works. So this is another layer of complexity when we talk about public finance, for sure, is the exchange rate. All right, this guy, we're going to put right back up here, which Russia has struggled from and has been rightly antagonized against because of their full-scale invasion of Ukraine. All right, so one more thing. Let's just show the external versus total debt. Okay, so again, this is foreign debt versus total, including this default that they had in 2022 during the full scale. It's come way down. Okay, Russia used to have about 90% in foreign currency. I shouldn't say foreign currency because some of it actually would be rubles eventually, denominated in rubles but owned by foreigners. This is, to be clear, the distinction here is debt, Russian government debt owned by foreigners versus owned by locals. Still, the majority is owned by foreigners, but way less than it used to be. It used to be 80-90%. Now, after the full-scale invasion of Ukraine, after the defaults, foreign-owned debt of the Russian Federation is down to 57%. This is a double-edged sword. Firstly, this actually helps Russia because they have less concern over what foreign currency exchange rates can do to their economy. But it also hurts them because Russia, as most people know, is a poor economy. 1 in 5 Russians don't even have a toilet. And all they do is export oil and gas. Massive sanctions. They're a pariah in the world. They're a terrorist state. That's going to hurt them in trade. So it talks about external debt, total debt, exchange rate. Let's take off external and this. Let's just look at total debt now. Okay, so as we know, 60% is owned by foreigners, but let's keep it with total debt to keep this a little bit simpler. All right, let's move on. Let's look at the printing press as a component of Russian government total debt. Okay, what is the printing press? It is the monetary base. I've talked about it many times. It's right here. What are you looking at when you see this line on the chart? You are looking at how many rubles have been printed, okay, ex nihilo, by fiat from the Central Bank of Russia. How many rubles in totality? This is physical currency. It's also digital currency in the form of bank reserves. That's bank money. Bottom line, includes both. Base money divided by the total debt of the Russian Federation. What you're going to see here is a percentage that basically shows how much money is printed as a total debt. So for every ruble outstanding in total debt from Russia, how much is actually in effect printed by the central bank? All right, and you see that this number is quite high, 57% as of September 2024. For reference now, what is the United States' Federal Reserve ownership of United States Treasury total debt? We've talked about this many times as well. It's under 20%. It's about 18-19%. Again, I'm not saying that's a good number. In fact, that's definitely on the high side. For reference, again, the United States topped out in the 70s at about 15%. 15% Federal Reserve monetary-based money versus the total debt. That went down, and then after the GFC, it went up again. Actually, during COVID, it topped out at 30%. Just so you know, for reference. So the United States has definitely been printing more than their means or more than people would recommend during COVID, 30%. Now it's down to about 18, 19%. What is Russia's? 57%. Okay. But there is more to the figure here with Russia, and that's what we need to go through in this video. Why? Comes back to the foreign currency. All right, the foreign currency on many levels. The foreign currency exchange rate, also foreign currency reserves that the Russian central bank will hold. Typically, those are going to be found in the central bank, not in the government. Foreign currency reserves in the central bank of Russia. Now, why don't we think about foreign currency reserves in the context of the Federal Reserve? As I've said, the United States is in a lucky, privileged position. They don't care at all about foreign currency. Okay? The United States has an account with the IMF. It's incredibly small compared to other central banks' account with the IMF relative to the United States treasuries that the Federal Reserve holds or that the U.S. Treasury has outstanding as a liability. Hopefully that makes sense. The point is, foreign currency, as I've said, has really very little to do in the thinking of U.S. monetary policy, U.S. fiscal policy. While you are the world's reserve currency, king dollar, and people want to hold your currency as a store of value, you don't have to think about FX rates as much. I'm not saying that that's always going to be the case for the United States. I'm not saying that Bitcoin or maybe even gold won't have a bigger role in the future due to all of the madness that has occurred in monetary policies since the GFC. I'm not saying any of those things. I'm just saying it's much more important foreign currency and foreign currency reserves and FX rates when you're talking about a country that does not have a global reserve currency that it prints, such as the Russian Federation and the Russian Central Bank. So we have to take that into account. And taking that into account, by the way, is actually going to help the picture that you see here. So as I told you, the U.S. is 18, 19% as a benchmark. All right, how much U.S. Federal Reserve dollars, digital and physical, are printed versus United States total public debt, 18, 19%. Russia looks like it's 3 times that. It's actually not. It's actually not. You got to account for foreign currency reserves. Now, what is included in foreign currency reserves? It's included other foreign bonds, boons, and obligations that the Russian central bank owns in other central banks. Okay, so indeed, they're going to hold some treasuries. They're going to hold some German boons, some UK gilts, so on and so forth, as an asset for them to stabilize their currency. Okay, so that's how this stuff works. And it's a much bigger percentage, like I said, than anything the U.S. deals with. So we got to account for that. Also, when you talk about international reserves, it includes gold. Okay, so we have FX reserves, gold. You put those together, that's called international reserves. FX reserves, which is usually those bonds, boons, and obligations and gilts that the Russian central bank holds from other countries, plus the gold, you get to international reserves. All right, we're going to go through it. First, let's look at gold. And mind, we are looking at all of these things as a percentage of the Russian government's total debt. That's going to help us put everything in proportion and understand it as we try to understand how much of a crisis is the Russian central bank in at the moment. Let's put up gold. All right. This is helping them a lot, tremendously. Okay. Those that have been paying attention know that the Russian central bank, as well as the Chinese central bank, have been buying gold since 2008. All right. They did not have a lot here. Look at this gold percentage of the debt. 2% of the debt was held by gold in the central bank, just a ratio, okay? 2%, 3% before the GFC, okay? All was not well. GFC occurred. They said, we need more gold, and they did. And both from a combination of the increase in the gold price and an increase in their holdings, you see this gold line go way up. This is helping them tremendously, and I don't think that this is enough of the story that people actually understand the situation of the Russian central bank balance sheet. You need to understand their gold reserves. So as a proportion of debt, the Russian central bank holds 37% in gold. That's going to protect the value of the ruble. It's going to protect the relative external view on Russian government debt, Russian obligations, to an extent. Now, again, there is a myriad of other factors that are not on this chart, as everybody should know. Okay, Russia has massive sanctions for the last 3 years. The West is trying to not trade with them. Of course, They are still trading oil and gas, which is very bad for Ukraine, very good for Russians because they have a monopoly on this. For Europe in particular, Europe is not energy secure. Energy independent is not the right word. You need to say energy secure. Europe is not. So there's a lot of other factors I know that are going into this. We're just talking about debt and money. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe. There's a lot of factors that make the Russian central bank and the Russian government look worse in the eyes of the world, but this makes them look quite good. And it's pretty high. All right. Again, with the US, talking about foreign exchange reserves or talking about gold, it's a drop in the bucket. No one even thinks about how much gold the Federal Reserve owns. They do own a bit, but they don't even mark it to market, which is a whole other thing. They might not even have it, which is a whole other thing. I'm just trying to show you all the different avenues that we can talk about this here. You gotta look at foreign exchange reserves much more if you're talking about a smaller central bank such as Russia. International reserves as well when you include gold. Here's the gold amount. Okay, so this is going to help the monetary base figure tremendously. Okay, but it's not the end of the story. Let's take away the monetary base figure, and let's even let's put up now international reserves as a percentage of the public debt. Okay, so international reserves, again, it's going to lump in the rest of the foreign currency. So SDRs, accounts with the IMF, again, Russian investments into gilts, bunds, other foreign, trezors, French trezors, other government bonds around the world, Japanese government bonds that the Russian Federation has invested in the past. What's the balance of that? Okay, so Forex reserves, that's what I just described, plus gold gets you to international reserves. So let's look at the total international reserves of the Russian Federation or Russian Central Bank as a portion of the total debt. Here it is now. This looks quite well. Okay, this looks pretty good. Look, you're getting over 100% here before the GFC, and now you're getting over 117%. But this is weird, right? So we need to ask ourselves, how could it be that Russia suffered tremendously, by the way, before the GFC, but apparently they were like net zero as far as, the Russian total debt outstanding to foreign creditors and domestic creditors was the same amount as international reserves that the central bank held. It just must be weird that, they would fall into crisis with such a high ratio. Why could that be? Okay. The answer to that question is those foreign currency reserves were not good enough themselves. They all got hit as well. This is the problem with thinking that your foreign currency reserves are going to help you on a rainy day. I'm going to drill the point home even further because of what happened here in 2022 during the full scale. Russia got away with invading Ukraine for 8 years. We didn't do anything from the West, okay? But in 2022, finally the West said, let's freeze these foreign currency reserves that Russia has. It's about $300 billion worth, if you want a number. $300 billion worth is represented in this percentage here. And they froze them, okay? And so that has shown again that those foreign currency reserves are not really helping Russia. Here, they didn't help because of the global financial crisis. Dollar reserves weren't even seeming that good. Euro reserves weren't seeming to be that good. And on down the list. Okay, so that's why foreign currency reserves are kind of it's a little bit of a misnomer to think that you're truly safe if you have those. I think you got to look at what is a neutral currency or a unconfiscatable currency, such as gold. And I'm saying currency, of course. It's not a currency, it's a commodity. Or, as we know, Bitcoin. Now, on the Venn diagram of people that like Bitcoin and people that want to support Ukraine to the hilt, I wonder how big that is. I feel like it's pretty small. I feel like sometimes I'm the only person in that Venn diagram, okay? Of course, being a neutral currency commodity like Bitcoin, like gold, when you are faced with an aggressive nation that is trying to take over another nation, in the case of Russia versus Ukraine, you're going to not look at things like their gold reserves or their Bitcoin reserves positively. And we've definitely seen that from the press. Okay, Putin just said recently in a conference that, you know, he likes Bitcoin. And of course, there's a lot of Bitcoiners that are just getting very excited about that because a state actor is talking about buying Bitcoin. Another state actor, I should say. That's fine. That's all good and fine. Still, at the end of the day, having a good war chest from a democratic country is vitally important, because if autocratic, kleptocratic countries like Russia, like China, like North Korea, like Iran start holding Bitcoin, they're going to get stronger. So you in the West do not need to denigrate Bitcoin. You need to take Bitcoin seriously because Russia's going to get stronger. And I'm going to illustrate the point further here to show how much stronger they've gotten simply by holding gold than they otherwise would be. If they didn't hold that gold, they would be absolutely screwed. The ruble would have already tanked by now. We're finally getting to the conclusion of this video. This video is a bit longer than I wanted it to be, but that's the conclusion. Okay, so the international reserves here are actually kind of a myth, okay? Because those reserves, you know, again, this is, okay, in the case of the dollar, maybe okay, but look at what happened in the global financial crisis. Like, no one really, Russia had a huge amount of international reserves as a portion of their debt, 1-to-1, and it didn't help them. I know you can't see that it didn't help them, but let's put the ruble rate back on. You see the ruble devalued. It didn't help them. Why? Because international reserves actually aren't that strong, because in global systemic crises, everybody is getting screwed at the same time. And we probably first had that for the first time in 2008. You can argue in 2000 a little bit, but you know, this crisis here, this was the Asian crisis, the Russian/Asian crisis. The U.S. was more or less isolated from that. Okay, it wasn't really till the global financial crisis that we had a global systemic meltdown. And so Russia learned from that. China learned from that. Other central banks learned from that. So this dotted black line didn't help them at all, evidenced by the currency devaluing and other things that I don't have on this chart. But the point is, international foreign currency reserves are not that strong, even if you theoretically have a lot of them. And they're certainly not that strong if you invade another country, sorry for laughing, Ukrainian friends, and then you don't have them anymore because the West, which at least has some principles, and here I'm saying this is a good thing, it's a criminal genocidal act that Russia is doing. So if you have the ability to constrain Russia financially, I do think you should do it. I think you should do it. And they are doing that right now, and Russia is suffering from that. But what if Russia had Bitcoin? What if Russia had more gold? These are the questions that everybody needs to be thinking about, autocrats and Democrats, going forward. And it's crucially important for the safety, security of the world, in my opinion. Because if no one wants, you know, the ruble, or no one wants the dollar, everybody's on a more equal playing field, and it's going to come down to just power and weapons. And that's the big picture, if you want to talk about politics and Bitcoin and all the rest. So anyway, I think I've beaten that horse a little bit too much in this video. The point is, these international reserves don't mean much. They don't mean much because, first of all, they've been frozen for the last 3 years. For Russia, about $300 billion worth. And secondly, when a global crisis occurs, they're not going to help you that much. Okay, so I'm taking this off. International reserves doesn't mean much. The gold does. Okay, if Russia had that gold in Switzerland, they wouldn't have gotten it back. But most of that gold, as far as I understand, is in Russia. So from their perspective, that helped them during this invasion. I wish they didn't have it there. I wish Putin was stupid enough to keep the reserves in the West, like he was for the Forex reserves. But we are where we are. Okay, so I'm taking the ruble off now. We have the gold. This is the X factor that I think not enough people are paying attention to, that is still helping Russia at the moment. So how do we put this together with this? Remember, this is the printing press. This is the monetary base. This is how many rubles are actually printed as a proportion of the debt. How do we put them together? Well, look at the tooltip. The denominator is the same. Total public debt. We can just subtract these numbers, and get to a more accurate, realistic figure that compares to the United States figure that I told you of 18-19%, how much printed money is a proportion of total debt. In the United States' case, 18-19%, this number, subtracting the black line from the gold line, will give us a comparable number for Russia. And here it is in red. Okay, so I'll take them off. I'll take the lines off so you can see it even clearer. But just to understand, the black line minus the red line, the denominator is the same. Doesn't matter if it's priced in rubles, priced in gold, or priced in dollars. As long as your exchange rates are consistent, the percentages will always be the same. The black line minus the gold line is going to equal the red line, and that is more comparable to other central banks around the world, including the US dollar. Okay, so let's take off the gold. Let's take off the monetary base. This is the unbacked monetary base, or the net monetary base. Monetary base is a liability for the central bank. Take off their assets that mean something. That is the gold account. Then you get to this. And in this case, now, again, higher is worse. Okay, so here, when it's the gold reserves, higher is better because it's an asset, right? Higher is definitely better. And gold has been increasing in price, been helping them very much. 37% of public debt they hold gold. That quote unquote backs that. But again, you got to discount the monetary base. In other words, or from the monetary base, you discount the gold. Either way you want to say it, that's where you get this. So now we're looking at a net liability now. Higher is worse. Higher is worse. So now we can see that those international reserves didn't mean much at all. The printed money minus the gold was not good. They were up to 46% on the eve of the GFC, the Russian central bank. Foreign currency means nothing. That's the point. This is going to show you basically, in my opinion, where the Russian central bank is relative to Russian debt, relative to the economy, relative to how foreigners look at Russia. It's just one data point, I know, that we got to with this very long video, and I'm sorry for that. But this data point, in my opinion, is crucial to understanding sort of the end-of-day leverage that the ruble has in the economy. So it got up to 46%. Here we see that after their default of foreign debt, it got up to 34%. Okay? But they were able to hold that off. They closed the market off. They closed the market off for rubles. They're doing that now as well, trying to only let Russians use rubles, trying to make other people pay in rubles, although that has failed. They're running out of tools. And this only goes till September. And remember, the FX rate, okay, this goes till November. It's the only thing that goes till November in this chart. Everything else is till September. The date is delayed. I wish I could show you more. I'm going to come back to this often, though, because I think that this is going to show us if the ruble has a major crisis, okay, and we go from 100 to 150 to 200 or whatever, unfortunately, it's going to be a delayed indicator, but this will be the indicator that will really show you. All right, it's how much money the central bank has printed less the amount of gold that they have. That's at the end of the day, that's what this calculation comes down to. Now, in the future, just to be clear, Bitcoin is going to factor into the international reserve picture as well, okay? Governments are still going to want to print their own dirty currencies, that's for sure. And I include the dollar in there as well. Everybody's going to want to print to cover their problems. But gold is already coming back into play for Russia. You can see here. I think it's not getting enough play in the news. It is helping them, okay? Because if they had no gold, you'd be looking at this. Way high number, 57%. For every ruble that the government owes the world, that includes the foreign creditors and internal creditors, for every ruble that the Russian government owes, they've printed 57 cents or kopecks or whatever it's called. That's way too high. At the end of the day, your international reserves matter. Russia and China did have foresight to accumulate gold. This is not a new story for gold bugs or people that kind of follow the gold market. It will be a new story when Bitcoin becomes a part of the picture, and it's something the West needs to pay attention to. You can't sanction Bitcoin. You can't stop Bitcoin from flowing between Russia and China or Russia and India. And when countries get big and they want to invade another country by fiat, ex nihilo de facto, because they say that they don't believe in those borders and they just want to, if the free world wants to defend itself, it's going to come down to pure force. because you're going to run out of economic tools if gold and Bitcoin are more in play. And that's exactly what Russia and China are starting to do. So I hope that's clear. I hope you understand what I've been trying to say with discounting certain things here. It's different. This analysis is different in a foreign currency than it really has been in the last 2 years with everything I've been doing with the dollar and dollar monetary base or United States Treasury debt, so on and so forth. When you have a foreign currency, and foreign is in anything other than the dollar, the FX rate and those reserves that back up that printing press are way more important. So at the moment, I would say, before the global financial crisis, this metric got up to 46%. Right now, it's very close to the US's. In fact, 20%. I know there's a lot of other pressure on Russia and other things, a myriad of other things that they have pressure on. And I hope the pressure keeps up. But here, the gold is actually helping their currency tremendously. We're already seeing the markets speculate on what's going to happen. They don't have enough fighters. They're spending money to the oblivion to keep the pressure up on Ukraine. They just lost Syria. I know they got a lot of bad news coming. But I'm not going to feel, and again, we should want the Russian economy to collapse and them to get themselves out of Ukraine and stop this genocide. But I'm not going to feel like they're capable of even making that step unless this red line gets much higher. So with that, I'm going to stop this video about the Russian ruble versus the Russian debt. Let me know what you think of that analysis. If you liked that, if you understood it, if it was too many lines. There's a big story I tried to put together there. Perhaps I'm going to start to do some live videos as well. This one is actually not so cutting edge of a chart, right? It's delayed. You don't get these figures until sometimes even on a quarterly basis. So it's not great for a live video, frankly. But I think I might be doing that in the future as well. So if you like that, and if you would like to see live videos, please let me know. Thanks for watching.